Hi, this is Charlie Aiken of investmentmatters.club. I'd like to introduce you to our investment timing solution, which is a very cost-effective service to help investors enhance their investment returns whilst reducing risk. Tell me, which would you prefer? A helping hand to higher returns, or fear, worry and loss? I think I know your answer. We're going to briefly go through what it is and why it's ideal for now, whether it's complicated to use or not, just who it's for, and what have been the results, and is it expensive? Well, as for what it is, it provides an easy to follow traffic light signal for 5 major indices, which are named there for America, UK, Japan, Europe, excluding UK, and Asia, excluding Japan, plus the dollar gold price. It throws up 3 signals: red for sell or to avoid, in other words you shouldn't be in the market; neutral or yellow, again uncertainty, so you should avoid; or green, which is go go go, where you should be invested for hopefully significant returns. It's a monthly publications, but any signal changes are notified to subscribers by email intra-month. Well, certainly if there's one chart that shows just how uncertain the main indices have been over the last 18 months, this is it. And as you can see, they've been busy going nowhere, but with pretty high volatility. And the indices are now so important because, well, just about everybody invests in the indices. What this is a chart over the last decade which shows that an increase in defections from actively managed funds, that's where there's a human or a team of human beings that do the underlying stock picking, and that's been replaced by an ever increasing amount of money flowing into index tracking funds or index exchange traded funds, which are simply computer driven portfolios. There's no human element, and the computer box just adjusts the underlying weightings of the investments depending on how things are going up and down throughout that particular trading day. Now, whilst the index trackers have lower costs and other benefits, a major negative and risk is that they are always fully invested with little in the way of cash levels, which ensures a fast fall if and when everybody heads for the exit together. Hence, it's very important to keep an eye on the indices. Now, why we love charts is because they don't lie, and this is just a very simple example looking at the UK FTSE 100 index and S&P 500, that's America's top 500 companies by their size, and it goes back over 5 years here, and I'll put 2 red vertical lines. One is the referendum vote in the UK about whether to exit the European Union or not, which was in June of 2016, and a little later that year, November, when a surprise to many people was that Donald Trump was voted or won the presidential election. Now, the perceived wisdom, and most of the financial commentators at the time were saying that either of those events would be a major sell-off for the stock markets. But as you can see, it was anything but. The UK went up, as did the US. In fact, they went up quite a bit, particularly the US S&P 500. Now, a good system, such as the investment timing system, would have kept you in for the ride, and what turned out to be a substantial ride. Is it complicated to use? Well, although that's not the clearest on the screen there, there's full guidance provided via the 15-page report, which includes 2 charts of different durations. One is a 1-year chart. Let's blow that up a little bit there so it's a little bit clearer. which includes two different indicators, some moving averages, use of what's known as Fibonacci relationships, and of course the colored-coded signals. Now, as mentioned earlier, green is for buy, so that's when you should be in the market. Neutral, although it doesn't come up as yellow, it's white, means you should avoid the market, and you should certainly avoid the market during the periods of red, unless of course you've got shorting skills, and you can make money when the indices have fallen, of course. But anyway, that's the one time frame, which is 1 year daily. The second part is a longer 10-year, well in this case it's more than 10 years, because we want to show the financial crisis of 2007 through to 2009. Note that this got you out way ahead of this. And again, there's different indicators here, and there's some comments, but you don't really have to concern yourself too much about all the notes and everything else. The only main thing is the color-coded signals, which, as mentioned, are included on the report, and this is the type of email that you'll receive if there's an intra-month change, which says what the index is, what date the signal was triggered, and whether it was a buy, sell, or neutral, and at what price. And we might have some additional notes, such as mentioned on this one here. So who's this for? Well, certainly for private investors who wish to take control and make better gains, and there is an increase in private investors who frankly have become disillusioned with some of the results that they're getting from the professionals. It's also for professional investors who want an early warning system other than perhaps what they're looking at the moment. It's a great sales tool for mutual fund marketing departments to focus on what area is currently in vogue, or indeed for research departments for their added analysis, or as added value for things like networks where there's financial advisors. Now then, the results, the all important. So I'm going to show you two examples. One's for the UK, and this is over a 5-year period through to 22nd of July. And what we have there is the UK All Share Index, which over 5 years has managed to go up 15%. For those human, so an index tracker would have done pretty similar to that. The human mutual fund, or an active managed fund, and this is an average, which means some have done better, but also some have done a lot worse. But either way, the average over that period has done somewhat better than the index's 15% at 37%. So managers have at least earned their crust by doing double what the index has done. But just look at that compared with our UK timing solution, which has gone up 105%, which is 7 times what the index has managed to produce, and substantially better than the average active managed fund. On a second example, we use the dollar gold price, and here £100,000 invested over that 5-year period. It was a pretty flat period for the dollar price of gold, and that would have turned 100,000 into 114. So in other words, it went up 14%. But again, look at the investment timer solution for this asset class, a whacking £245,000 versus 114,000. And the secret with both of these have been avoiding, well, let's quickly go back to the last one. It's avoiding the neutral and the sell signals by keeping out. That's what makes the returns so much more attractive. Again, here, look, we were out during this period of time, we were out during this period of time, but fully enjoying the green shaded parts. So in summary, it's a 15-page monthly report for 5 major indices as mentioned, plus the dollar gold price. Each section includes a shorter one-year chart plus a longer 10-year chart showing the color-coded signals and added indicators. And just to repeat once more, any signal change intra-month, you get an email notification, so you always know what's going on. Is it expensive? Well, that's in the eye of the beholder. So what I've done here on our 2 examples of the UK and the gold price is I've actually worked out what the monthly cost or the annual and monthly cost for each one of these on the difference between what the index produced as opposed to what our system produced, and it comes out as £1,500 per month is the gain for the UK over 5 years, and 2,100 odd for the gold price over that 5-year period. Now, the normal price of the investment timer solution is £125 per month or £1,000 per annum. So you can see it's been substantially better to pay this for the results that you got. We currently have on offer a mid-year special, which is a 15% discount. So it's at £62.50 per month or £500 per annum, and you lock in that for the next 12 months. You also get a 30-day money-back guarantee, and I think you'll agree at that rate, compared with the returns, it's an absolute steal. Now we have to put up the obligatory health warnings. Anyway, I'll wrap up there. There is a link to take you across to show the where you can purchase if interested, and I look forward to seeing you in the not too distant future. Goodbye for now.